What's all this business about gold bar levels?
I backtested the Inner Circle Traders one shot, one kill model using 3 years worth of data from Edgeful. I will confirm whether ICT's recommendation for the day and time you should trade the one shot, one kill model is high probability or not. And if it isn't, I will give you the days and times you should be trading to be more profitable. I'm a professional trader who worked on the Goldman Sachs trading floor during the Great Financial Crisis. And interestingly, the founder and CEO of Edgeful is also a Goldman Sachs alumnus. If you would like to have access to Edgeful, there's a link to a free trial in the description to this video. So when you load up Edgeful, you are presented with the dashboard, and we are going to be testing ICT's one shot, one kill model for Forex, and the specific report we're looking for is the price action report and the intraday timing report, which is a range and trend analysis report. So we want to ensure that we are looking at the whole day's worth of data, and we're going to be using 3 years worth of data. Now, ICT's premise for the one shot, one kill is the high or low of the day for Forex is likely to occur during the London Open kill zone, which he defines as between 2 a.m. and 5 a.m. EST. He further says that the high or low of the day should form by 3:30 a.m. Now, first, looking at GBPUSD and the high of the day using 3 years worth of data, we can see that this is the London Open kill zone. Within the London Open kill zone, the high of the day is most likely to occur at 3 a.m. That is 2.5% of the time. But if you have a look at the spike, the high of the day is more likely to occur at 10 a.m. Okay, so this is inconsistent with what ICT said. And if you have a look at the volume of the London Open kill zone, the aggregate volume is less than of the New York Open kill zone, specifically post the New York Open at 9:30. Okay, this is where you want to be catching the high of the day. If you look at the low of the day, you'll see again that the spikes occur during the New York session, specifically 8:30 a.m. So if you are trying to catch the low of the day, you really want to be putting on your trade during this high impact news at 8:30. Okay, so let's put this into context. If you are looking to catch the low of the day and sell at the high of the day, you are more likely to have the low of the day at 8:30 a.m. and the high of the day at 10 a.m. Okay, so this is inconsistent with putting on a trade in the London Open kill zone and then holding it till the end of the day. Okay, you really want to be at the latest, you want to be exiting your positions around 10 a.m. and the spike typically occurs at 8:30 a.m. anyway. Let's see if the data for EURUSD is any different. Okay, so looking at the high of the day first. Again, the high of the day typically does not happen during the London Open kill zone. Okay, the high of the day happens around the New York session. Okay, that 8:30 a.m. news creates the high of the day more than 3% of the time. And if you look at the aggregate volume of the London Open kill zone compared to the New York Open kill zone, the high of the day is more likely to occur then. Again, looking at the low of the day, similar story. This is when the low of the day occurs also. So buying in London and then holding until New York isn't as high probability as ICT implies. Now, the second part of the one shot, one kill model is buying on a Tuesday, because he says the high or low of the week should occur on a Tuesday, and then selling on the Thursday, because he says the opposite side of the candle should occur on Thursday. So we can do some similar analysis in Edgeful. Now, if we change the report to the high and low by weekday, you will see 3 years worth of data using the full day, that for EURUSD, the high of the week is more likely to occur on the Monday than the Tuesday, okay? And then the low of the week is more likely to occur on the Friday rather than the Thursday. This goes against what ICT said, right? And let's check GBPUSD. So according to ICT, the low of the day should be on a Tuesday and the high should be on a Thursday for a bullish week. Again, the lows of the day are likely to be on the Friday and the high of the day is more likely to be on the Monday. So you want to be shorting on the Monday and then closing out your trade on a Friday instead of the Tuesday to Thursday play. But you'll see that the volume on Tuesday, Wednesday, and Thursday for the low of the week has been very, very low. There are a lot more reports in Edgeful. And if you are a full member of Edgeful, you can request custom reports. If you would like a free trial of Edgeful, there's a link to the description in this video. And if you would like to learn my time and price golden bullet trading strategy, there's a link to my mentorship below.